Wow, it's been a crazy week in crypto this week, and there's a lot of updates, and a lot of people are discussing BlackRock. Of course, as always, their $10 trillion tokenization push. What is real and what's the hype? I think there's a lot of contradicting opinions about this, and I will let you know in the show all about that update. Of course, there's some news about a hardware wallet hack, which is basically showing that hardware wallets are not the safest way to store, and you would think offline storage is safe, but hey, it's really not. And there's somebody who actually stole $230 million in the big scam and only got 2-year probation. All of that and more in today's show. And of course, let's start off with BlackRock. And BlackRock is tokenizing $10 trillion. Sounds impressive, right? But look, this is the reality of it. BlackRock does manage a $10 trillion portfolio, but it's not going to be tokenizing all of that and slapping it all into blockchain overnight. But it is laying out the groundwork, basically, the infrastructure, which is eventually going to move parts of the assets that they hold on chain. The $10 trillion number that you've been hearing is basically the total assets under management. And one important thing is, obviously, if BlackRock makes a push, smaller players do also. And we're clearly seeing this because there's so many other projects. You've seen the cards project, which is tokenizing Pokemon cards, which are massive. I've seen the numbers. People are actually making more profit than the S&P 500 from Pokemon cards. So definitely a great project if you want to check it out. Not sponsored, by the way. There's a lot of companies like Homebase, they're tokenizing it. There's basically finances moving, standard finances moving into RWA. And for those of you who have been deep in crypto for a while now, have been looking at RWA projects, there's quite a few coming up, like Nomad Fulcrum, which I will link down below, and you can always ask me in the chat if you want some other projects to research. But the point is that RWA seems like the industry which is going to be very prevalent. So AI agents, and now RWA is clearly coming into one of the more prevalent industries to focus on for this bull market. Now, let's turn our thoughts into security, because if you're going to put trillions of dollars onto ledgers and onto assets online, you better hope that they're safe. And hardware wallets are sold as the most safest way to store your crypto, because basically you're storing it offline. But in reality, we've heard so many news and so many updates where these hardware wallets are hacked. And basically, recently, Charles Guillemet, I believe, sorry if I'm butchering that name, but he's made a statement literally a couple hours ago. There's a large-scale supply chain attack in progress. The MPM account of a reputable developer has been compromised. This affects packages have already been downloaded over 1 billion times, meaning the entire JavaScript ecosystem may be at risk. Damn, this is scary stuff. And we've seen this happen before with Ledger products. And this is the thing. There's a developer who's basically got hacked, and you see this over and over in projects. The developer got hacked. We've got nothing to do with this. And please, once again, don't mistake me for saying that I'm blaming anybody who's involved with this or saying anything as such. But we see this time and time again, and people do keep on telling you it's not your keys, nor your crypto. So the best way to store your cryptocurrency is with a decentralized wallet, where you own your keys 100%. With a hardware wallet, you don't, and it's clearly a little bit more centralized, or a lot more centralized, however you wish to look at it, than a decentralized wallet where you own your keys. So this is a really important part, and I think everyone should take note of this. I will leave the links down below for you all to check out. And that brings me on to the next story, actually. And this one really pisses me off a bit, and whoever's been in crypto long enough, I'm sure you've seen this over and over. But there's a lot of there was a story in the US justice system. I'll bring this up now. So there's an indictment charges for $230 million crypto scam, which is insane to think about, really. And this individual basically, he got probation. He got a probation. And I think he got like a 2-year probation or something like that. And he stole $230 million. So he's not even going to jail. And I'll leave the links down below for this. But it just as we're talking about scams, I thought I'd bring it up just to piss all of you off, because this person, yeah, this person basically is living the life, and he's probably got the money still, and he's got nothing for it. He's probably had some good lawyers to bring those charges down. So yeah, check that news out. But let's move on to more interesting news from the industry. So look, the market took a really big dump in the past day. I'm making this video over a couple of days, and 60 billion just got wiped out, and it's all leading up to September the 17th, which is where the Fed is looking to make rate cuts. At the moment, inflation is around 3%. It should be at 2%. There's a lot of speculation that the rate cuts are not going to create an instant bullish market. Not a lot is going to basically happen. It might create, a stable market, or it might even have a short-term dump. So for anybody who's looking to move their USDT into Bitcoin or to swap it to any other token, I highly recommend to just hold off for a week or so, see where the volatility of the market is going, because on the September 17th, when the Fed will make those cuts potentially, and they really shouldn't be, because if inflation is so high, they shouldn't be making these cuts, but because of political pressure, they are going to, by the looks of it. So anyway, long story short, for now, the market is going to be extremely volatile, as you're seeing anyone who's checking your portfolios every day. So yeah, do keep that in mind. September 17th doesn't mean the bull market is instantly going to start, but it potentially does mean a short sell-off, and then the market is going to go boom. And here is my end segment, and this is a rabbit hole that maybe none of you even thought about, but I went down into the rabbit hole of US debt as of recent. And for those of you who don't know, it's sitting around at $37 trillion at the moment, and the number is it's a huge number. And now this is where it gets really interesting. Trump and his family are tied to a project called World Liberty Financial, and they already sold a government's token. And they're creating a stable coin called USD1. It's pegged to the dollar and backed by short-term US Treasury bonds. So basically, this is the US dollar on the blockchain, and the launch wasn't smooth, as many of you do know this. The price went crazy in one day, but this is the issue. There were a lot of big investors like Justin Sun who were dumping the token after the trash launch, basically, and their accounts got frozen, so they couldn't dump. So this is completely not a decentralized government's token to start off with. But let's get into the interesting part. Putin's advisor said that the US is going to use stablecoins as a way to shove its debt onto the rest of the world. And looking at the history of this, America loves to put the burden of its debt through the US dollar, and has been doing so for decades. So why wouldn't they do the same with crypto? Just think about this. If stablecoins like USD1 take off, what they can do is they can be stuffed full of US treasuries. That creates demand for government debt, but it also means the crypto industry ends up carrying some of that burden on its back. So instead of the debt sitting with banks, with investors, with governments, it's suddenly wrapped into stable coins and into the plumbing of crypto itself. So now that actually, does it erase debt? This is the question I sort of looked into. And no, it doesn't erase the debt, but it changes who's holding the bag itself. So who's holding the debt itself? Now, the biggest story of the US is finding better ways to spread their debt, and they're really good at doing this. And now they're doing this across the global financial system, and of course with crypto. So here's the big question: if stablecoins are just treasuries in disguise, would you still trust them yourself? And of course, the answer is no, for me at least personally. So, are we watching the US export its debt problems into blockchain the same way it did with the US dollar, or no? You let me know what you think about that in the comments down below. If you've enjoyed it and learned a little bit about the market and some of the most important headlines throughout this week, we're going to be back next week. But for now, this is Block Desk News. All the best. Bye bye.